Get ready, because the crypto world is absolutely buzzing, and we've got the inside scoop right here on Bitcoin Bulletin. The market is moving at lightning speed, and if you're not plugged in, you're missing out on crucial updates that could shape your portfolio. Today, we're diving deep into a whirlwind of activity, from major price shifts that have everyone talking to significant whale movements causing ripples across the entire ecosystem. We've got analysis, predictions, and the raw data you need to stay ahead of the curve. So buckle up, because you're about to get the unmissable, high-octane breakdown of what's really going on in crypto right now. First up, we're seeing some significant shifts in the market as major players adjust their positions, leading to price movements that have traders on the edge of their seats. Is this a dip to buy or a sign of more to come? We break it all down. Then, prepare yourself for a deep dive into a massive whale transaction that sent shockwaves through the market, triggering liquidations and a fierce battle for a critical price level. We'll explore the immediate aftermath and what it means for the future. Next, we're looking at the underlying health of the network itself, with on-chain data revealing signals that could indicate a shift in momentum, alongside some surprising moves in the NFT space that are definitely worth your attention. And finally, we're examining the impact of major financial products as investor sentiment takes a sharp turn, leading to significant withdrawals that could redefine the landscape. All this and more is coming your way, so don't go anywhere. Make sure to smash that like button, subscribe, and hit the notification bell so you never miss an update. Market momentum shifts as Bitcoin dips below $110,000. The cryptocurrency market is currently experiencing a downturn, with Bitcoin trading below the significant $110,000 mark, and other major altcoins like Ethereum, XRP, and Dogecoin extending their losses. This pullback has sparked considerable discussion among traders and analysts regarding potential entry points and future price trajectories. Traders are closely observing key technical levels. Michael Van de Poppe has identified levels just below the recent low as a great entry for accumulation for Bitcoin, suggesting a bullish outlook for the long term. Similarly, trader Tardigrade noted that Bitcoin has successfully retested its inverse head and shoulders neckline, a pattern often associated with the initiation of a new uptrend, implying that the current dip might be a precursor to further gains. However, not all major cryptocurrencies are showing such clear bullish signals. Altcoin Sherpa pointed out Ethereum's indecisive price action, highlighting that, while the $4,300 region is holding on the 4-hour chart, there's still a risk of falling towards $4,000 on the daily chart, admitting to being caught in an unprofitable long position himself. For other significant altcoins, crypto chart analyst Ali Martinez observed that Solana has faced another rejection, maintaining his target of $300 but advising potential buyers to either accumulate at $176 or wait for a confirmed breakout above $207. Meanwhile, Polaris XBT noted that XRP is holding near the upper boundary of its current trading range, with liquidity building on both sides. A sweep and reclaim of this liquidity could present a favorable long entry setup. Dogecoin also presents an interesting case, with trader Tardigrade suggesting that the current pullback could represent the last favorable entry opportunity before a potential significant price surge. These market movements and analyst observations provide a complex picture for investors navigating the current crypto landscape. While some indicators suggest potential accumulation phases and upcoming uptrends, others highlight ongoing challenges and the need for caution. The interplay between Bitcoin's performance and the trajectory of major altcoins will be crucial to monitor in the coming days. But is this dip just a temporary pause, or is something bigger brewing? We'll find out next as a massive whale transaction shakes the market. Bitcoin whale sell-off triggers market mayhem and battle for $110K. Bitcoin's price action has recently ignited intense debate among traders and analysts, centering on the critical $110,000 support level. After a brief surge following Federal Reserve Chair Jerome Powell's comments, Bitcoin experienced a sharp retreat. A significant sell-off of 24,000 BTC by a long-term whale, who had held the coins for over 5 years since acquiring them from HTX, triggered a drastic drop from around $114,790 to $110,680 within minutes. On-chain analysts reported that this whale is now routing the proceeds into Ethereum and other altcoins, raising concerns about potential further price deterioration. This massive sell-off led to widespread liquidations in the derivatives market, with CoinGlass reporting $218.29 million in BTC long liquidations on Sunday alone, marking one of the largest events since early August. Similar liquidations were also observed in Ethereum and other major tokens. The price drop pushed Bitcoin below key technical indicators, including the Ichimoku cloud and the 50-day moving average, signaling a bearish momentum shift. The Relative Strength Index, RSI, falling below the 50 level further confirmed weakening buying pressure. Market participants are now intently watching the $110,000 support level. Analysts are divided. GelofX suggests Bitcoin must stay above the monthly open at $111,900 to avoid a correction toward $100,000, while Captain Fabic believes the $111,800 support is weakening, potentially leading to a move towards $107,000, $108,000, and possibly a retest of the $100,000 psychological threshold, which aligns with the 200-day simple moving average. The broader cryptocurrency market has been significantly impacted, with the total market capitalization falling before stabilizing. Ethereum and Solana were among the tokens dragged lower. Bitcoin's dominance dropped to 57.9%, its lowest since January, suggesting a shift in investor interest towards altcoins. Willy Woo attributes Bitcoin's slow growth in this cycle to ongoing sales by older whale holders, predicting the bearish trend could continue without substantial new buying interest. The outcome of this support test is critical. Holding above $110,000 could lead to a rebound towards $112,000, $116,000, offering bulls relief. Conversely, a breakdown could trigger deeper corrections towards $103,000 or $100,000. The increased integration of Bitcoin into the financial system, with large institutions and governments holding BTC, means a severe crash could have far-reaching consequences, as warned by Kevin Rusher of RAAC, who noted a zero crash scenario could trigger a crisis larger than 2008 due to Bitcoin's systemic relevance. While whale movements create immediate market turbulence, what do the on-chain signals and NFT trends tell us about the broader health of the crypto ecosystem? We'll explore that next. Bitcoin faces pressure amid weak adoption and bearish on-chain signals. Bitcoin continues to struggle under pressure, with recent on-chain metrics indicating weak network adoption and bearish momentum, despite a recent price rebound. The cryptocurrency dipped to as low as $108,760 during Asian trading hours before recovering above $110,000. However, analysts like Timothy Messer from BRN point to a cooling relative strength index, RSI, nearing oversold territory and a bearish moving average convergence divergence, MACD, both signaling a lack of sustained buying interest. The spot capitalized value deficit, CVD, remains negative at $199 million, reinforcing seller dominance, while the daily active addresses metric has fallen below 700,000, further underscoring low user participation in the network. The broader crypto market mirrors this weakness, with the CoinDesk 20 and CoinDesk 80 indices experiencing declines. Derivatives markets show mixed signals. While Bitcoin's open interest, OI, remains high, indicating continued speculative interest, Ether and altcoin OI have fallen, suggesting capital outflows from these segments. Over $940 million in leveraged positions were liquidated, with over $800 million stemming from long positions, primarily impacting Ether. Bitcoin futures OI on the CME has also decreased, potentially signaling fading institutional interest in regulated derivatives. Conversely, options OI continues to rise, reaching its highest levels since late May, with a notable skew towards BTC puts, reflecting heightened bearish expectations among options traders. The NFT market has not been immune to the crypto slump. Blue-chip collections like Pudgy Penguins and Bored Ape Yacht Club, BAYC, have seen significant price drops, with Pudgy Penguins falling 17% to a floor of 10.32 ETH and BAYC down 14.7% to 9.59 ETH. Doodles experienced one of the sharpest declines, dropping 18.9% to 0.73 ETH. While most secondary projects also saw double-digit percentage drops, CryptoPunks demonstrated relative resilience, losing only 1.35% over the week, solidifying its position as a defensive asset in volatile markets. Despite these price declines, trading volume for top NFT projects like Pudgy Penguins, Moonbirds, and CryptoPunks remained robust. However, the overall NFT market capitalization has decreased by nearly 5% to $7.7 billion, down from its recent peak, highlighting the high beta nature of NFT blue chips and the flight to stability seen in legacy projects like CryptoPunks. While on-chain and NFT metrics paint a picture of current market sentiment, how are the more traditional investment vehicles, like Bitcoin ETFs, faring amidst this volatility? We'll look at investor sentiment in those products next. Investor exodus from Bitcoin ETFs shakes market confidence. Bitcoin exchange-traded funds, ETFs, are currently facing a significant wave of outflows, with cumulative redemptions reaching approximately $1 billion over the past week. This trend marks a notable reversal from earlier months, when these funds saw substantial inflows driven by growing institutional interest and a generally bullish market sentiment. The recent outflows are being interpreted as a reflection of broader uncertainty within the cryptocurrency market, exacerbated by volatile price swings and ongoing macroeconomic concerns. These redemptions have been observed across multiple jurisdictions, with ETFs based in the US and Canada experiencing the most pronounced effects. Analysts suggest that investors are reassessing their exposure to crypto assets, particularly as Bitcoin's price has retreated below key psychological support levels. Factors contributing to this shift in sentiment are believed to include increased regulatory scrutiny and the market sensitivity to Federal Reserve interest rate policies. Bitcoin ETFs have been instrumental in bridging traditional finance with the crypto sector, offering a regulated avenue for both retail and institutional investors. However, the current outflows raise pertinent questions about the sustainability of investor confidence in these products, especially as alternative, more stable asset classes begin to regain traction. The $1 billion in redemptions has not been uniformly distributed across all Bitcoin ETFs. Funds with higher expense ratios or less liquid structures have experienced more significant outflows. In contrast, larger, more liquid ETFs have seen more moderate declines. This divergence suggests that investors may be selectively reallocating their capital within the ETF category rather than exiting the crypto space altogether, underscoring the importance of fund structure and liquidity in investment decisions. Looking ahead, industry analysts maintain a cautious, yet not entirely pessimistic outlook. While the outflows indicate a near-term cooling of enthusiasm, many believe that Bitcoin ETFs are still in their early adoption phase. Renewed inflows are anticipated if the broader market stabilizes and regulatory clarity improves. The long-term trajectory will likely depend on macroeconomic developments, evolving regulatory landscapes, and Bitcoin's ability to maintain its narrative as a hedge against inflation and financial uncertainty. And that's a wrap on today's top stories. We've seen major price swings, whale activity, on-chain signals, and shifts in ETF sentiment. Stay tuned for our rapid-fire recap and how you can stay connected. What a ride! Bitcoin dipped below $110K, Ethereum and altcoins followed suit, but some traders see accumulation opportunities. A massive whale sell-off caused liquidations and a fight for the $110K level, with bears eyeing $100K if support fails. On-chain data shows weak adoption and bearish signals, while NFTs like BAYC and Pudgy Penguins dropped, though CryptoPunks held strong. Finally, Bitcoin ETFs are seeing outflows totaling $1 billion as investors reassess risk amid market uncertainty. That's all the crucial updates you need to stay ahead. If you found this breakdown valuable, hit that like button, subscribe to Bitcoin Bulletin for more, ring the notification bell so you never miss a beat, and share your thoughts in the comments below. Also, follow us on all social media platforms to keep the conversation going 24/7.